Welcome back to Expat Chat, episode 176 today. I'm James Ridley, and as always, I'm joined with my friend, business partner, co-host, mentor, all of the above, Brett Evans, who is the Managing Director for the Europe, Middle East and Africa region, and also the founding director of the Atlas Wealth Group. Good morning, Brett. How are you?
And I'm well, thanks. I'm well. It's been an interesting couple of months, and we've never got a shortage of things to talk about. And we've had a bit of a break, sorry guys, because I've been travelling and James been travelling. So thanks for your patience in waiting for us to get back on the airwaves. But we're back, which is great to be there. For the folks new to the call, my colleague and friend and managing director for the APAC region is James Ridley, who's on the call with me today. G'day, James.
Good afternoon. And Brett, I mean, it's been a busy week this week. We've had the 2026-2027 Australian federal budget Tuesday night.
It's a doozy.
It was a doozy. It kept me up quite late at night. I think sort of went down 2:30 p.m., 2:30 a.m. I should say. And there's a lot to unpack. However, we are doing some seminars. Brett's obviously running around Dubai, Abu Dhabi, Middle East, doing some in-person seminars. We've got some webinars next week. So please keep your eye out for those, register accordingly, and we'll be unpacking the federal budget, putting a Australian expat lens over that as well, and just talking about it in general. Obviously, it was a type of budget with significant tax reform. I think a lot of what we saw, we had, I guess, the preview of the trailer leading into the budget, but I don't think we expected the severity of what the tax reform was.
That's spot on. And for the folks who want to jump on that webinar, so this episode will be going out on Friday the 15th. It's next week. If you go down to the events link in the description below, you'll be able to register for the webinar. So we don't want to sort of let the cat out of the bag. It's a doozy. Pretty much Labor doesn't like anyone is my take on it. That's what I'm telling folks in Dubai and Abu Dhabi as I'm running these seminars. So for once, expats don't have the crosshairs on them, which is great. So, but there's a lot to consider. There's a lot to consider, and yeah, we'll unpack that next week in the seminar, and then obviously we'll do a podcast and have a chat about it. But mate, today we're going to talk about the Facebook group, the Australian Expat Financial Forum, and a bit of Q&A. So appreciate the folks for putting their questions in the group there. Before we go any further, let's get the compliance out of the way. All the information we're going to share with you good folks today should be treated as educational and informational and educational purposes only. Please do not construe this as personal advice. If you do need to get personal advice, please speak to a specialist like Atlas.
Yeah, absolutely. And I'm running through these questions today. We've got a bit of a laundry list. We'll see how many we want to cover. Let's jump into it. I'll read them out and off we go. Hi, everyone. I need to get some information on maintaining compliance of my self-managed super fund while living in Dubai as an expat. Can anyone guide me in the right direction? Good question. Absolutely. SMSF, very dangerous area for Australian expats.
Yeah, look, there's such a grey space, and it's not grey because the legislation isn't there. It's people make it grey because they talk to other
Yep.
people who don't know information. If you want the black and white, unless it's an extreme circumstance, SMSFs do not work for expats. I don't care who you talk to. I've put this out there. I mean, you and I have been doing this for 1,000 years. No specialist has ever come to us and said, James, Brett, you're wrong. You can run an SMSF overseas. The only time I've ever seen one like black and white compliant, dot the I's, cross the T's, was a client rolled their SMSF in with a family member in Australia, and the family member's balance was greater than theirs, and the family member did all the work. So central management control was stuck in Australia, which is great,
Yep.
tick. They didn't contribute to their SMSF, tick.
No active
So
members.
no
Yep.
members test and happy days.
Yep.
I'm going to use a swear word here, not a bad one, but the bullshit about just putting someone else on as a trustee. I had this running debate with someone the other day about it because they were convinced because their local suburban accountant said they can do it. And I said, great, look, your local suburban accountant probably does a lot of good domestic work, but they don't sit on our side. How is it a self-managed super fund when you're not managing, when you're not the trustee, you're only the beneficiary? It's not self-managed anymore. It's now other people managed, not you. And he's like, oh, yeah, I didn't think of that. So I said, all you've done is you rubber stamped to try and get around a
Yeah.
piece of legislation. I said,
Yeah.
and then we started jumping into the active members test and we started talking about the quantum of the decision-making process. And he's like, oh, well, yeah, I do probably send some WhatsApps, to answer some questions. I said, well, you're controlling from Dubai.
Mm.
You can't do that. So if the
Mm.
ATO get hold of those messages, which they may, who knows? I mean, it's a digital world these days. It's scary what they can get into. If they do get into that, guess what? You've just lost 45% of your balance of your account. Is that risk worse?
Yeah.
At risk losing? And he's like, no, I guess not. And I said, what do you hold in the fund? And he said, just shares. I said, roll
Mm.
into a hub or a net wealth. You can do
Mm.
the exact same thing without the compliance risk, without why make your life sort of worse than it has to be? So coming
Yeah.
back to
Yeah.
the question, only in extreme circumstances is it compliant, and everything else
Yep.
you're cooked. That's just a matter of time
Yeah.
before they catch up.
And I think you make a really good point there. I feel like a lot of people, they set up SMSFs to invest in shares. Like that's really common, but you don't need to. There's plenty of other wrap like super funds these days that allow you to access international shares, your US share market, your Hong Kong, your FTSE, your ASX, managed funds, ETFs, all those sort of things. You don't
Mm.
need to set up an SMSF these days. Tech has finally arrived and it's been here for a few years now where you can do that. You only really setting up an SMSF if you're an Aussie resident and you try and invest in, I don't know, physical gold and precious metals and crypto, and property
Property.
is probably the most common one. Yeah,
Yeah.
property is probably the most common one. Yeah, that's right. So that makes sense, Aussie resident, and you'd just be running such a fine line, and you're increasing obviously the risk of the ATO stealing half your balance, your retirement balance,
Yeah.
in the event you're ever audited, and then you've got to prove that you haven't been running it non-compliant. That could be very difficult.
Yeah.
So yes, be very mindful of that, but yeah, the legislation is pretty clear on that one, so just don't run the risk. Number two here, good question here. So good morning all. Just wondering if anyone else is considering becoming a non-resident and living abroad before they liquidate some crypto. Hope this makes sense. Thanks and have a great day. There's a
Everyone in
little bit to
Australia right
probably
now after the budget.
Oh, it's a bit like that after all the tax reform. I've never been so deflated after a budget, to be honest. I just can't.
Australia had a
It's,
productivity issue and now it's gotten worse.
oh, oh my gosh, just to get it so wrong. Anyway, but
Yeah.
they there's a few things here. When you move overseas, you become a non-resident. If you own any assets such as shares, crypto, things which are paper-based, which could be considered non-taxable in the future when you are a non-resident, in order for them to be reset to be tax-free, you'll have a deemed disposal event. So that will be a capital gains tax event. So if you're looking at your crypto and thinking, oh, I've invested in crypto for a number of years, I'm going to move overseas and I'm going to make it all tax-free. Well, in order to make it tax-free, you have to pay tax on the growth up until the day that you leave. So there is still that exit tax. And a lot of people, especially a lot of crypto bros, they think that doesn't apply to them and that's
Yeah.
not a thing. It absolutely does apply. We've given a lot of advice to a lot of
Yep.
crypto bros and obviously self-made millionaires in the crypto space as to how they've had to structure themselves as they've moved overseas and now they live permanently overseas, and they are a non-resident, but there is usually the exit tax you have to pay. So if you're unsure of that, reach out. We can definitely cheer your ear off about it, and maybe some tax planning opportunities around that while we still can after the budget. But yes, you will have a CGT event before you can realize the benefit of that crypto portfolio being, tax free.
100%. I mean, we've also made Bill cry. I had a 55-year-old guy crying to me after he moved overseas for 3 years and crowing on about his crypto holdings doubling and tripling and everything. And then I said, oh, so you paid deemed disposal 3 years ago when you left Australia? He goes, no. And his whole world just came crashing down. So it wasn't my finest
Yeah.
moment of professional services, but
It's,
it's not our job to judge. It's our job to advise. And I gave him the information.
God,
So
it's like I remember crypto goes through these unique stages where it's all the rage. Like I remember having calls a couple of years ago. I remember speaking to a gentleman who he had really good savings each month based on his current work. And he was putting 20 grand Aussie into just Ethereum every
yeah,
month. And he said, I'm just going to keep doing this for the next 10 years. Just like, oh God, okay. And that
yeah,
was his strategy. That was it. And I sort of, you look at the price, the price, the up and down all over the place. It just, didn't make any sense. No diversification at all. Alrighty, next
Next one.
question. Yeah, let's get away from crypto. Should you
Run.
should you keep contributing to super while living overseas? Yeah, good question.
Look,
Good question.
pre-budget, yes. Post-budget, 100,000 billion% yes.
Even more so, I know.
Yeah.
And that was something, a really important takeaway that Brett and I were talking about a couple of days ago after the budget. It's just emphasized how important superannuation is.
Yeah.
Super was not touched
Touched.
through this budget. It's kept all its concessions, kept all its tax concessions. Division 296 is now in play, but that's we're talking about $3 million and $10 million thresholds here. Super is the most concessionally taxed asset and investment vehicle you can have in the Australian tax landscape as it is.
By a country mile.
By a country mile. Nothing else scratches it now if they get through all these new and updated tax reforms. So if you're not contributing to super and you're over in the Middle East, you're in the UK, you're in Southeast Asia, definitely worthwhile reconsidering that and maybe considering putting it in. If you're in the United States, just be mindful of how it can be treated by the IRS. So if you're unsure, have a chat to us or have a chat to your US accountant, but you just need to be mindful of how it could trigger some taxing events in the future if you're aggressively contributing to super while you're in the US. Maybe you've got the opposite side on that one. You've got 401ks, IRAs, and those sort of things you can utilize. But yes, super just became so much more important after this budget.
And last night in the Dubai session, the seminar we ran about the budget, the question always was, what if I'm not going back to Australia, which a lot of people are deciding not to, even more so probably after Tuesday, but even before that, yes. And I said, that's fine. It's a tax concession savings vehicle, regardless of where you go in the world. Now, if you are in Dubai or in Switzerland or in France or in the US, and actually US is a bad example, Hong Kong, Singapore, and you're on the fence, 50-50 about whether you go back to Australia or not, still use super. And I'll tell you why. Because at age 60, when you do cross that threshold and decide to hang up the briefcase, if it's not Australia, you can do one of two things. You can draw on allocated pensions from Australia, and depending on the jurisdiction you're in, could be tax-free, or you just draw the whole thing out in cash. You've got a forced savings mentality where you cannot put an ATM card in on a Friday night when you're on the piss and draw money out. It's like the mafia, once in, never out. It's locked in till 60. It's great because, trust me, people will touch it if they could. And it's that forced savings. And look, obviously don't put all your money in it because, you need liquidity. But having a savings mindset in super as an expat, even more so now.
Yeah. Yeah, absolutely. Again, it just wasn't touched in the budget, which is great. Hopefully Labor doesn't touch it if they're in for another term or two. We'll just have to wait and see, but absolutely. Next question here. What are the tax implications of renting out your former home?
Look, it depends on the property. I mean, how long is a piece of string? So you got the capital gains tax concessions, considerations, I should say. You don't get the 50% discount, which a lot of people don't realize until after the fact. So from the growth that you experience while you're overseas, you get stung with the whole amount. On the income side, you don't get negative gearing, so you can't claim back those losses every year. You accrue income tax losses that, God, it's so many connections to the budget. I was about to say something and I was like, I can't say that.
Because... Oh, well, no. And one of the proposals in the budget was this change to negative gearing, but what the change to the negative gearing is what expats currently experience without realizing it. So, but that's okay. We'll unpack that later this week and next week on the webinars. But I think the main residence exemption is the probably really important one there. If you're renting it out, if you sell it as a non-resident, you're not entitled to the MRE. So therefore, that you'll be a taxable event. There'll be maybe some discounting based on the period that you've owned it as an Australian tax resident. Uh, if you only rent it out for 6 years, return back to Australia, move into it, and it's only ever been a main residence, you rent it out again for that temporary absence rule and then sell it. It should be a tax-free transaction. Um, but you want to make sure you're an Aussie tax resident at that point in time and off it goes. So there can be tax implications.
Yeah.
It just depends on how long you're renting out for. If you're renting out for, 10, 15, 20 years, absolutely. It's not going to satisfy the MRE anymore. You get a
Yeah.
partial main residence exemption if you sell it later in life as an Aussie tax resident. But outside of that, you just need to probably do a bit of a deep dive into the different scenarios and do some modeling.
Right, spot on. Spot on. What's the next question?
Yep. I think this will be the last one for today. So do Australian expats still need life insurance in Australia?
Whether you're an expat or not, whether you need insurance it's a good question because
it's a
everyone's
good
situation
question.
is different. If you're
Yep.
in your 30s, you've got three kids under five, you're laden with debt on a mortgage, 100,000%, because
Yep.
your biggest asset is you and your ability to generate an
The
income.
money.
Whereas when you become an expat, you may get life insurance for your employer, depending which country you go to. There's all sort of different bits and pieces.
Yeah.
But
A lot of
I
nuances.
like it. I liken insurance to wills. You should have, sorry, not license, insurance. I liken insurance to wills. You should have insurance in every country you have a liability in,
Mhm.
or there's any sort of risk in terms of that accrual of income. So if you own a lot of property in Australia, a lot of debt, of course it makes sense. If you die,
Yeah.
you don't want to leave that legacy of debt to your partner or family.
No.
So 100% there. When you look
Yep.
at offshore, um, insurance offshore is different. In Australia, we have group cover, we have assessed cover. There's all sorts of different versions, which, there's good and bad reasons for each. Overseas, it's pretty much all group cover, which means that your claim will be assessed when it happens, and the insurance company's not on the hook when you start the policy. Where in Australia, you can get assessed cover, which means that
Hmm.
you go through all your medicals and everything at the beginning, but then the insurance company goes, no, no, we've got you. And
Yep.
I had one client in Singapore who, due to the nature of his work, went from being a non-smoker to a smoker. And he, as a result of that, we reached out to the insurance company and said, hey, we said he was a non-smoker, he's a smoker now. He said, no, no, we're good. When we initially took him on as a client, that was a risk we were willing to take. So my answer would be, yes, it makes sense to have insurance back in Australia if the circumstances warrant it. If you're a
Yep.
20-year-old backpacker putting pints in a bar in London, no. But if you do have responsibilities and obligations, yes. But also
Yeah.
look at the type of cover, whether it's group cover or assessed cover. That's a big
Mhm.
distinction as well too.
Yeah, it is. There's usually a price you pay for that assessed cover as well. It's usually a bit more because they've underwritten you already. So
Yeah,
you're not underwritten a claim. Groups usually a little bit cheaper. It's group and probably what we'd call default cover. That's often what you see in your Australian super.
yep,
Like, that sort of insurance. You've never had any questions, but it's just whacked on there based on your contributions that are going in, your age, maybe what they think your occupation is, and that's really it. So insurance makes sense, especially if you've got responsibilities, liabilities back home, whatever country you might be in. So just be mindful of that. Whether it's in Australia, well, just depends.
yeah. And look, and people often ask me, do I have cover back in Oz? Yeah, I do. It's just cover. It's just that peace of
Yep.
mind. Wife asks me every 5 minutes, has it been paid? Yes, it's always paid on time and every month, so it's valid. I do go to some weird
Yep.
locations, folks, so if you live my life, you'd understand why she asked me that question. But
Yep.
yeah, long story short, do I personally have cover? Yes, I do. Back in Oz.
Yeah.
So underwritten,
Yep.
happy days.
Yep, exactly right. And that was the last question for today. I don't want to get through all of them because we'll be here probably all day. But keep an eye on the socials. We do have those webinars coming out next week. And then we also have some more webinars coming out in
Even
June
after.
as well. So
We've got a lot going
yeah,
on.
exactly right. Yeah, we sort of wind things down, and the financial year is fast approaching. So we'll do a couple of special episodes around end of financial year planning because that is very topical right now. And then we'll also keep an eye on draft legislation pieces which are coming out. We usually see that sort of mid-May through to To the end of June, first tranche draft legislation should be hitting all our inboxes very soon.
No, spot on, mate. Well, let's let the good folks get back to their treadmills, walking the dog, driving to work, driving home, whichever way you listen to us, and see you guys on the next episode.
Sounds good. Thanks, guys. See you on the next episode.
Thanks, guys.